Good morning, and welcome to episode 120 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, April 26th, 2023. I'm joining you live today from Bally's Paris Resort in Las Vegas, where I'm here for the Las Vegas Money Show. The news across the floor and across the country yesterday was unmistakable. It was a dramatic drop in share prices of First Republic Bank. Those shares dropped nearly 50% as first quarter earnings came out showing that the bank had a massive depositor flight of $100 billion. The toxic assets left on that bank's balance sheet are going to be very challenging to turn around by the bank itself or by any potential acquisition target. So the bottom line is it's not a pretty road ahead. The contagion spread to other banks. It spread to Western Alliance Bank Corp. It spread to PacWest. It spread to Zions. It spread to Charles Schwab Corporation, all down, not nearly that much, but affected clearly by the results. Wall Street and investors continue to be concerned about this ongoing bank crisis and the probability of pain ahead. Let's take a look and see what's going on with the prices, and then I'll give you a little idea of the sentiment both here on the floor and around the country. Gold is up slightly this week, about 1.4% to $2,000.20 was the close yesterday, from $1,972.60 last week. Silver up as well, not as much, 1.1% to $25.09 from $24.81 last week. Platinum, the big winner in the precious metals complex, was up 3.8% over the week to $1,116 an ounce from $1,075 last week. And palladium, the sole loser, down 4.8% to $1,611 today versus $1,693 last week. The gold-silver ratio, the number of ounces it takes of silver to buy 1 ounce of gold, slightly increased, went up from 79.79 last week to 80.00, or right on that magic number that suggests that both gold and silver prices are attractive for acquisition. Gold for your insurance policy, silver for your profit potential. And as you can expect, the US dollar remains under pressure, down to 101.30 today from 102.05 last week. The sentiment here on the floor in the aftermath of the First Republic news just kind of feeds into the fire. I can tell you it is absolutely one of concern. The backdrop that this plays out against is obviously we have the ongoing debate for the debt ceiling that's going on in Congress. There's increased searches on Google right now, record highs for people looking for how to buy gold. Bitcoin has surged up through 28,000. There's an increased movement of central banks around the world to replace US dollar reserves with gold reserves. And I got to tell you, gold remains one of the hottest topics here at the Money Show, and as a result, our booth is one of the most popular booths here. It tells you that people are absolutely concerned. I'm not trying to raise fear or panic here. I do believe people ought to have gold in their portfolio. I've said that for years and years and decades even. You don't need to buy it just because there's a crisis. You need to have it all the time. But if this gets people to take the step that they need to take, so be it. Continue to look at your portfolio, make sure you're well protected in this environment. I don't know a better way to do it than to buy gold and make sure that allocation of your wealth insurance is taken care of. As always, we'd like you to go ahead and subscribe and like us on YouTube. Send us your comments and questions so we can share them online. Subscribe to our social media and our newsletters and alert services. But don't ever forget that getting rich starts with keeping what's yours.